Here now, the founder of Disruptive Technology Research, Lou Bassanese. Lou, it's good to see you. First on Facebook, your reaction to the quarter last night.
Look, I am just shocked and disappointed in this rally. I mean, I think this is really putting forward that investors and management favor profit growth over ethics. I mean, look, this week we had, I think, one of the just biggest disappointments in privacy protection with the Facebook research app. I mean, just total disregard for Apple's wishes, total disregard for teenage users' privacy, and yet investors are cheering profit growth. So, look, I can't argue with the fundamental numbers. I mean, the stock's reasonably valued. You've seen growth come back in the U.S. This is a key market. And advertisers just don't have any other outlet, any other alternative to reach 2 billion potential viewers. So it's one of those things. It's a toxic investment to me.
So you wouldn't touch it?
I wouldn't touch it. Look, I think there's a lot of risk embedded there. What's the next privacy scandal that's going to come to light? Facebook over the years has really made more excuses than changes to what they're doing.
Let's talk about the Fed. The Fed essentially on hold yesterday, saying it's on hold, indicating that more dovish stance when it comes to interest rate hikes. What was your reaction to what the Fed said? In particular, also saying that the balance sheet unwind is also a way that they could pull back and perhaps stop the 50 billion sales a month.
Yeah, I don't think I can remember in my lifetime just a more dramatic turn of sentiment at the Fed. I mean, in October, they were saying that we were a long way from neutral, and now yesterday's statement said that we're within range. I mean, they went from playing hardball with the president to playing patty cake, and, investors love that. So, more easy monetary policy coming. I think they gave themselves some flexibility on unwinding the balance sheet. Not that they didn't say that they were going to be data dependent before, but now they just made that much more of a point to communicate to the markets that there's not going to be a fast and hard unwind.
Well, I mean, we were sort of expecting this in the last couple of months, that's for sure. But would this be a signal for you to put new money to work in stocks?
I think absolutely. Look, the Fed has been supportive of stock prices. I mean, there's a lot of people that would argue this bull market would not be around without the Fed. So with the Fed being very accommodative, I think it's time to come back into the market. We're going to see that. You've seen a dramatic reversal, even in the more speculative areas of the market. And I think I pointed out before in another appearance that the Philadelphia Semiconductor Index, tremendous bounce off the lows, up almost 20% and about to break through the 200-day moving average. So, yeah, it's risk on again.
All right, two more things on stocks. We've got earnings, obviously, we're in the middle of a very busy period. Dow DuPont just reported they beat on earnings per share at 88 cents a share, but they missed on revenue at $20.1 billion versus an estimate of $20.9 billion. How would you characterize the earnings season so far, and what is that telling you about the backdrop?
Look, it's a mixed bag. We haven't really seen a huge beat rate on the earnings. On the bottom line, I think the top line's been even less impressive. So in DuPont's report, it's epitomizing it, right? We're seeing some earnings growth, but the demand on the top line is not there. So, look, I think we're in more of a stock picker's market, points more towards active management and really trying to find those companies that are overcoming the China hangover, that are finding strength despite some pockets of weakness.
How much of a focus is the economic data for you? We've got the January jobs report out Friday morning, tomorrow morning, 8:30 a.m. Eastern. We are expecting 165,000 jobs added to the economy last month, with the unemployment rate holding steady at 3.9%. We had the ADP numbers earlier this week. They were strong.
Yeah, no, they're very strong. Look, I'm a tech guy first, but I love to see tailwinds and the jobs market supporting that. I think many people thought we might have a slowdown just because of the government shutdown and just that extreme volatility in December that might have put some businesses a little uneasy about hiring. But the ADP report, like you mentioned, this week pointing to just continued strength. So another positive for the market.
Sounds like you think we're going to get a pretty good year, 2019.
As of now, look, a lot can change. I mean, look what happened in December. So I don't want to go on the record and say it's a foregone conclusion. 2019.
But you've got to put money to work either way.
Yeah,
so what do you do?
I think I put money to work. Look, I like the semiconductor industry, particularly companies like NXP, really undervalued at about 11 times earnings. And the chip makers are going to make this world go from here into the future. About 1 trillion semiconductors shipped last year. They go into every big growth trend that you can think of.
Yeah, I guess even more so with 5G on the way. Lou, it's good to see you this morning. Thanks so much.
Thanks, Maria.
Lou Bassanese joining us.